Alright boys, what a day, pretty long. In terms of action in the Asian session, we got a fair bit of it. It's RBA delivered, so the Euro-Aussie trade that we were on yesterday made some money. Pretty lucky too, because the market was moving against us on that one. Let's bring it up here. Euro-Aussie was starting to dip it down a little bit from the price we got in, around about 148.58 or something. The market shot higher on the back of the RBA being much more neutral than the market was wanting, in terms of looking for hints that they were going to join the Raise Rates Club. That's been growing around the world out there. Canada, UK, US, and Europe all part of it, and or tapering in the ECB point of view. But the RBA was pretty cautious, yeah. So the selling that came through was pretty much sort of what we expected, but what was a little bit more interesting is that the selling has not led to a rebound. So the buyers have to be a little bit careful here, because you're seeing some key levels being on the horizon. 75.80, below that you can get down to 75 quite easily, if that's the game they want to play, and perhaps a delayed sort of yield compression story. We talked about this last week, and while it was wrong when the Aussie flipped higher, they could bring it back. It makes sense, and it's a story which can get recycled, and you get that a lot in FX, right? Recycling of the same reasoning about why we're doing what we're doing, but really price action is what we dictate, and that's just bearish right now. So if the market was in a stronger uptrend, then it should have bounced a little bit by now, given that there was no explicit negative overture. It was just very much business as usual, same as last month. A little bit of concern about a housing market, a little bit of concern wage growth, but nothing crazy to get the market to sell this aggressive. So it's price action is much more bearish than you would want as a buyer. And so can it continue? Yeah. Is it dragging down the Kiwi with it? Yeah, it is. Kiwi's also forming some very bearish. We talked about the Kiwi being overbought and never really running more than 7 weeks in a row. It's just done 6 weeks last week, so this could be the pullback week, and the pullbacks in Kiwi are pretty vicious. So you might get 100, 150 points in a few days on the back of pretty much very little. It didn't need too much to keep rallying. It doesn't need too much to give back. I suspect that 72, 71, 80 sort of area should hold, though. That's where the buyers might have a little tug. It'll come back in. Let's have a look at it though on the 71.50, so it's about 150 points. Yeah, maybe we'll go down 71. If we can get down there, then we can talk about buying the Kiwi against something. Because Kiwi, actually, the economy is quite strong, and there's a reason why it rallied 6 weeks in a row. So an over sort of a reaction in the selling, and if we do get a bit of a correction here, is probably a buying opportunity. But let's try not to buy too early. That sort of pullback. I mean, this is led by RBNZ or just dairy prices. These big sell-offs. So I don't think you're going to get that unless dairy prices turn negative or stock markets turn negative. In terms of the reaction to the North Korea missile test, was limited, and then the big announcement was just about the missile test. So meh. The gold trade I'm in on the back of that, and we talked about that during the Asian session. I bought some gold in anticipation of maybe something crazy being said, like we can now hit America or something with our ICBM. Tested a intercontinental ballistic missile today. What could be more interesting is the US's reaction later, or Trump's reaction. Trump's a bit of a on Twitter lately, he's getting a little bit more loose again, and so we could see some more headlines coming through. I think yesterday he said something ridiculous to about King Jong-il. Let's bring it up. Let's bring Trump up on his list. So those who don't follow Trump, it's probably a good idea as a currency trader to start. North Korea just launched another missile. Does this guy have anything better to do with his life? Hard to believe that South Korea and Japan will put up with this much longer. Perhaps China will put a heavy move on North Korea and end this nonsense once and for all. Jesus. I mean, that's the President of the United States. You're talking pretty openly about the King John Mill. So in regards to can gold bounce, gold could have bounced already at these levels, right? Especially as we have a holiday and we have the NFP coming in, so the profit taking coming through ahead of that. Can it continue to sell off? Yeah, I mean, the momentum's been pretty fast, and the thing which is a bit worrying me on this trade is that dollar yen's continued to rally. So it's rebounded off the selling from North Korea quite easily, and if anything, gold's lagging that move, and gold and dollar yen have a pretty strong negative correlation. So dollar yen going up means dollar yen going down, and you know, if there is no fear, there is no fear, right? So you know, gold should have potentially even been higher than this already, and the fact that it's struggling to even hold these levels is not great. Yeah, so I might be cutting this earlier rather than later. If you need to put in fixed stops and you just want to know where you're putting a stop, then say something like 12.15, just underneath the previous. And I think it's 100-day moving average that Potter was telling me. And TP, in theory, we want to get it back significantly higher. So yeah, maybe just below the 12.38 might be enough. Yeah. But yeah, I mean, this is a time-based trade. I actually want this trade to be over within 24 hours. So that's what I'll be looking for in the US session. Perhaps some bit more buying coming through, or later in the European session. But yeah, so far it's not great. Yeah, the lack of follow through there is dangerous. So I'm not keen on it. Let's see what happens with the Aussie here as well, 75.80, and it is a fairly well known 80-20 sort of currency. So if it does break down below 80, you know, the chances of going to 75.20 are pretty strong. You hear about that a lot. Certain currencies have got that 80-20 tendency. So if it breaks above 20 on the way up, it's usually going to 70 to the next 80, wherever it is. I'm not sure why that's the case. You know, it's just something that's happened, something that's been developed over time. Yeah, Dave, it is an interesting life they have to live. You know, having a maniac military regime in the top of your country is probably a little bit stressful. I suppose you get used to it though. And it's been decades without a major incident, right? So perhaps everyone sort of feels chill about it in South Korea. Seoul's pretty close to the border though, isn't it? They can get shelled by artillery, isn't it? That's pretty mad. So yeah, keeping an eye on the Aussie and seeing if that's going to drag everything lower. Is dollar CAD back above 130? Let's have a look. It is. So oil's been really strong. That recount news. Also, Qatar, Saudi Arabia is also hurting in the background. We haven't really seen reaction just yet. Only thing I heard new today was Saudi Arabia is pulling out of G20 this meeting, and perhaps they just don't want to ask too many questions at that meeting. And I think they've still got another extension of the deadline still to come to. So we'll see how it plans out in the next 24-48 hours. Pound has just had some data out as well, and it's construction PMI. Very much at forecast, so market's not really responding to that. Pound has been under profit taking pressure since Monday, and so you know, we're looking for where the support can come in on this pair. Previous 128.50. That resistance there that it chopped up and came back down is sort of, it's a bought out sort of level. I would be looking at potentially easing back into some either long pounds or short euro pound or long pound yen rather than pound US, given our, you know, sort of NFP coming up. in terms of speeches as well, Carney gives that speech later in the week. So he's speaking before the G20. So there's a bit of risk there on Friday with the pound. Maybe it's best to avoid it, but getting into buying the dip probably is the best sort of risk reward here. If we were to go higher next time, it probably won't stop at 130. So that's the reward on the top side. You know, significant reward, 500 points still. And on the downside, I mean, you can have your stop, I suppose, below 127, 127.50-ish. So 100 points to make 500 would be that sort of risk reward there. But always just wait for the price action to say that there's a bit of buying happening. And data wise, there is a couple more pieces of small data coming out from the UK. Manufacturing production on Friday. Services PMI on Wednesday. Services PMI is critical. Alright, so that's the feel here. I'm not really sold that Aussie's going to break lower. It can, but I think we'll ease down, and then as soon as stability comes back in, bit of profit taking, a bit of bargain hunting on the buy side. Iron ore's still high, so we'll see if it can hold that range and retest that 77 in coming days. It would require also the euro to continue to be bought and dipped, so everything might be schooling against the US dollar here. So we're looking for the the pound to find support, the euro to find support. The euro is an interesting one in terms of the level that you feel safe buying. As I suspect that we can buy pretty, with a little bit of confidence off this 113 level, and if it breaks 113, I mean, you have to ask yourself why it's doing that, because that would be not really the sort of price action you want to see in this uptrend. I suppose the size of the move and that, I mean, it would have to be an ECB sort of comment coming out to crack it. Where we're getting the US dollar strength from, traders have been asking me all day. Clients call up and say, why is dollar yen so strong? What's going on with the US? US yields are actually continuing to be really well supported here, and while they're actually in the rate hiking cycle, so their yields have the ability to move a little bit more freely, whereas some of these other central banks are a bit more speculative. So perhaps this rally that you're starting to see in the US 10-year, it's quite strong now, is maybe outpacing the Eurozone rally now, which still hasn't got confirmation of what sort of timeline you've got for the ECB to start tapering and then raising rates. And also there's a timeline issue with the UK. The pricing in is only for 1 or 2 rate hikes, right? To get out of emergency settings, not for a rate hike cycle. And Canada is still speculative. Aussie is extremely speculative. So it's US is the concrete one where if the yields start to move and it's a much bigger beast, then you can see a bit more sustained rally in dollar yen on the back of that. In fact, if you had told me just 2 weeks ago that US yields would be where they are, I would have thought dollar yen would be higher than it is, and it's really only because of the lack of the US dollar weakness led by the euro rally that dollar yen isn't higher. And remember, US dollar yen was mucking around at the 112 level for most of last week. It could have easily been rallying in that same sort of scenario. So yeah, it's always a good idea, if you can't understand what the move's doing, and we say this a fair bit, you just check the bond market. That's usually where the answer is. Usually what's the missing link in the puzzle there. And that'll become a much bigger force in coming years as everyone's raising rates and the QE stops around the world. Eventually even Japan will have some movement in their bond yields, but not now. Alright, so let's have a look at some of the research that's been put out. Get a quick reaction from ANZ on the RBA. Steady as she goes. very little change from the last month, that's true. If anything, the market's a little bit more downbeat. So yeah, I mean the market was looking for a reason to buy, yeah, and it got a reason to sell. And from these levels, you know, the pullback's inevitable. But the size of the pullback really wasn't. Wasn't really. So far, we've had a bigger pullback than I thought so. There's a couple of notes of concern there about the economy and the future economy. So if you're still in the Euro Aussie trade that we're in, probably about time to get out, guys. Probably about time to get out, just in the short term anyway. If there was stock market weakness, or if the market was in risk-off mode because of, you know, Kim's you know, new missile test, then perhaps we'll keep holding it. And I did want to quickly go over the in the bond market world, one of those charts that we're looking at over the weekend, actually, just so you can fully understand what's important there. So in terms of tonight's bank holiday in the US for Independence Day, yeah, it could be really quiet. It could be really quiet. This might be the action might be done for today. That's another reason to look to buy the Aussie here, probably. You shouldn't get too much of a kick on. So US yields are still underneath their 2.5 sort of critical level for the top side, where it might break out to 2.8 to 3. But 10-year German bonds are testing that 0.5 to the top. But let's have a look at this chart that I just wanted to re-emphasize. So this is the same report we're looking at yesterday, but we didn't really go down to the but this is a Treasury German bond spread. So you're looking at the difference between the 10-year German US bonds and the German bonds with this chart. So you can see this has constantly been grinding lower in the last 6 months, ever since that peak after Trump got in. And with that, the euro has been constantly grinding higher. And so if you're looking for a major force behind a currency move, relative relative yields, right? The change in yields between countries is always behind big trends, and this one is getting lower and lower. And if the US becomes a bit more, you know, a little bit more delayed, lower for longer in sense of if they don't look like they're going to raise 4 times next year, or if they have a mid lull, if they have a couple of quarters of economic stagnation, and the Fed stops raising rates, then the German yields should have a fair bit more room to move. And if you're thinking of a way that the euro can get to say 140 or 150, it'll be if these get much closer. Yeah, so down to 1% or so, which is easily possible, very possible. Those cycles just match up like that. So this is a chart we'll keep on coming back to every now and again, just to see what's that relative move here. So if this continues to go down, then euro's going past 115. It's very hard to stop. Might be delayed by some German elections or Italian elections, some political risk, but it won't be stopped. I want to know what happens if Trump gets impeached. I mean, surely stocks go down, and then Fed might delay for a little bit, but in the end, it might be a good thing for America. Yeah, I mean, geopolitically anyway. He seems like he's capable of doing a lot of harm, at least to the America's stance in the world anyway. I mean, they have a responsibility to be the leader on many issues. All right, so yeah, I'm going to keep it on the gold here. If I close out the gold early, I'll let you guys know. But other than that, guys, should be expected pretty quiet night. Tomorrow we're going to go over a little bit more like the ADP and starting to focus on the NFP, because that's going to become the bigger determinant. If the dollar yen's above 114, it's going to be very tricky to play NFP on Friday, because we usually play via the dollar yen, and a high dollar yen makes for some sharper moves both ways. Alright guys, good luck with your trading. If you want me to look at a specific pair, like always, just send me a little PM here at the Forex Signals website, and I'll make sure I look at it for you at the next stream.